G'day everyone, welcome back to Pete's Investing. Today is June 2nd, 2023. This is the iron ore price update. On our weekly, it's just broken up from a bearish signal, so it's currently neutral. Likewise, on the daily, it's neutral. So looking at it more closely on the weekly, you can see there our triple moving average of the price chart is breaking up, and so is the CCI 150, and that's broken up from a bearish signal to a neutral positioning. That's our major trend on the weekly. On the daily, it's also, we're going to remove that minor support, and we're going to move this major support line to that position there. That's become our major support at the moment, and we're seeing the price moving up from there. And we don't see any sign of a resistance in this area yet. That's the next level of high level resistance that we're going to be potentially looking at. There was another point there possibly, so we need to be mindful of that area. So if it breaks above that, we're going to see further advancements, but that's just a minor area. I'll move a minor resistance there just to highlight it. So that's our minor resistance area at the moment. So if it breaks above that, we're going to see further advancements on the daily at least. We did have a bearish divergence here on the CCI versus a bullish divergence, and that played out. I drew this last time. We had a channel drawn within that divergence and a Fibonacci retracement in that range. And that was our initial target. So if I go to the hourly chart, you can see there more closely. That's where the target was, in between the 38% and the 50% retracement between that range. And that's our channel where the price broke above that. You would have gone long there. Now it just touched that level on the 38%, and that's where our minor resistance is at the moment. But you'll notice it came back, so no stress. We don't use stop losses. It pulled back, so if you hadn't hit that target initially, it's pulling back and it's now reaching that target level again. It's actually broken through this diagonal resistance, diagonal line, so it may go higher, and we expect it to go higher, but that's just a minor resistance that's formed. Also up here, we've got the a back test on both the long and the short programming. You can see there, had you gone long, you would have had a few drawdowns on your profitability during those little declines. One other area there, you wouldn't have entered any long trades there, and on the going short programming, you would have had a couple of average downs again, likewise in that same area, going long in those areas, but predominantly you would have made nice little gains on both positions had you gone long. Now the way you avoid trading those gaps is, again, when you see the daily and the weekly trend, you can see there during that period, in that area, you would have gone long during those daily, when the daily and the weekly align. So that's it, the areas you would have gone long, and likewise going short, you would have gone short more recently during those periods there, you would have gone short. So to understand this and other trading strategies, reference the links in the description below. Subscribe to our Patreon page, where we also take on requests to do any analysis on any instruments. We also scan for weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.